Hey,
Well, welcome, Tom. How are you?
Brian.
Yeah. Welcome. My name is Brian Knight, and I live near Melbourne in Australia, and it's just 5 a.m. or just after 5 a.m. on a Wednesday after a bit of a crazy move there. Backflips and um, I was just looking, Tom, that there's some figures from US Department of Trade and whatever it was, the figures from Canada about um, illegal immigrants and illegal guns and fentanyl and how much. And there's more going from US to Canada than there is going from Canada to the US. It's like, mm,
Yeah, of course it is. We're the meth lab below Canada.
yeah, 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 exactly. Um, Crazy, absolutely crazy. Anyway, welcome, Darren.
Oh, right.
So, welcome to this live Forex analysis session. Just note that any trades discussed in this group are to be classed purely as educational only. That's because we're a group of people helping each other and we are not financial advisors. There is a full risk disclosure and a bit about us as live session traders. So, looks like the craziness has settled down. Darren, it's like
Yeah, but hasn't Trump got a speech this evening? I read somewhere. So we might see
speech.
more action. He's making some speech or some sort this evening. So I read somewhere. I forget where it was. So I think they might push things around again,
Mm,
depending on what comes out of his mouth, which could be
mm.
absolutely anything. Knowing with Trump.
Yeah, yeah, yeah. Oh, I didn't see. Anyway, I was just saying, Tom, that I just saw a post about I think it was from the US Department of Trade and whatever, about Canada. And there was more fentanyl, more illegal immigrants, more illegal guns going from US to Canada than it was Canada going to the US. And of course, yes, Mexico is an issue, but the figures were about from like there's something like 3,000 illegal guns go from Canada to the US and 30,000 go from US to Canada. It's just like,
Yeah, but there's
mm,
thousands of illegal guns going to Mexico as well.
yeah,
US that
yeah, well,
these cartels that's where they're getting the guns from. The US. The irony. But I also saw some figure that something like less than 1%. All this stuff that's coming in, supposedly coming into the US from Canada, the ethanol, whatever it's called, and
fentanyl.
it's actually less than 1% of what's actually coming into the country. So it's a
Yeah, yeah, yeah. No,
tiny
the figures,
proportion of what's coming in. So it's just
yeah, crazy. Well, after the market open craziness on the Monday, gap's been filled and it's back up where it finished off at the end of last week,
yeah.
which is sort of sometimes can be quite typical of what's happening, and that knocked you out, and then basically going off in the same direction. So, and there's no tariffs at this point other than the normal ones he has on China. So there we go. Crazy, isn't it? Oh, let's AUD USD. Sorry, that one. Anyway, let's go back to AUD CAD. Have a look. It's still in a little bit of the doldrums up in here. But what's Canadian balance of trade, unemployment rate? Okay, so we do have non-farm payroll to consider at the end of this week. Today's only Wednesday. Um, yeah. So um, you're still in this trade, Darren?
No,
Or you
I've never got anything. Never.
never got in, not far enough out. Okay.
Yeah.
Right. All right. Well, again, it's not until the 18th of Feb we have any rate decision here. Don't know what's going to happen. I don't think they'll lower the rate, but anyway, they may. So AUD again, this big dip and push back up again. Look at the wick back down here. Craziness back to the sort of last year, back to December, and then straight back up again. Gap being filled, back to the same position. AUD So there's nothing. So Tom, have you got any movement? You're now that it's back to, it must be another brick. Let me just have a look. AUD Probably no movement. That. A lower time frame, there is a move.
No,
But
that's not a move.
no, well, I know it's not, but there's still a short on the daily. So no, it really hasn't done much.
No.
The latest brick on the daily is still the 18th of December.
Mm-hmm. So I'm saying the market hasn't moved.
Yeah, okay, and that's the
So
30th.
I've been in the
no.
same trades for a while now.
Yeah. Okay. Yeah, you look at the dates though too, don't you?
No, I really don't care about the dates.
Oh, you don't care?
No.
Okay, no worries. All right then. But yeah, correct. You've been in trades that you've been in for quite a while, and you're not in any new ones because there's really no movement.
Right.
Okay, fair enough. Good. Oh yeah, AUD JPY. That was a bit of a crazy failure, that one. It may not have made the 3/4, but still we've got imbalance back up here. And we don't have any sort of news, but we do have non-farm payroll coming. Okay, AUD Oh, look at the climb on that. Don't have a long. Still.
Ages since I've had a trade on this pair.
Sorry, that?
So it's ages since I've had a trade on this pair.
Yeah, because it was down over here somewhere because it hasn't made it. Well, it probably did profit you somewhere here or there, maybe.
Yeah.
But it's just been up and down and jumping around for ages. This is my Euro GBP. Anyway, they are ones to be careful of. AUD, NZD, Euro GBP, USD, CAD. You know, they all have that same sort of flavor of unpredictability to them. AUD Singapore. All right, I'm waiting here for a long. We'll see what happens. Maybe it's not ready yet. I mean, look at this. A lot of this is all just jumping around. Now, AUD USD is where you got knocked out and now it's pushing itself back up again. There has been a long-term push down.
Yeah.
So now there's this sort of jumping about at the bottom here to look for it to go potentially further up. It could go further down. I mean, the word on the street is it's going to come down to at least 60.
Yeah.
But in that there could be a lot of, unpredictable sort of actions occur.
Yeah.
or we lower interest rate. We'll see if, for example, Aussies do the RBA lowers the interest rate, then we could have a weakening of the Aussie dollar against the US. So, audio, CAD CHF. Not a lot of options of trades at the moment, Darren. That's craziness there.
No, it's not doing
CAD
anything.
J is, oh, now what's CAD J? Oh, here we go. You keeping away from this, or are we looking at it?
Well, let's have a look. We've got no triangle, have we? This is really odd.
No,
This is really
no.
odd because that was a buy because it opened out. It opened outside the rail, but that's a buy candle.
Yeah.
I think it needs a sell and then a buy outside the rail. I think, doesn't it, to trigger a triangle? So it's not. So no triangle has been created.
Yes, you're
That
right.
odd, because of the. But I suppose essentially it has been outside the rail, so obviously a
Mm,
triangle. The other thing is because it's such a we haven't got a long yet
no.
because of the size of that candle as well.
Yeah.
Stop
Yeah.
losses are going to be enormous on some of these
Mm.
trades for getting them. The risk reward ratio is going to be a bit rubbish. We'll have to see.
So
I mean, there's not a long on there anyway yet, so
it doesn't mean it won't turn around and short either.
yeah, no, that's right.
And do give us a triangle before it goes. Anyway, I think what you're saying is true. I mean, the risk to reward would be rubbish. And if we're going to introduce it, you really need to have, from a mechanical perspective, all of those components. You've never done without a triangle, though, have you, Darren?
No, I haven't. No.
So I agree with you. As I said,
Yeah.
there's no triangle down there. We do have a turn on the trend bar, but it's it's not really anything significant. It's come off that short. It did break the low though. It
Yeah.
came down and broke. But this could be just this. Well, see, it's CAD J. So this is really just tariff rubbish, really. Um, and potentially it's got further to come down. Look, we'll just and with non-farm payroll coming up. Anyway, it doesn't have the criteria for mechanical relaxed trading as such. CHF JPY. Now, again, we don't have a triangle. It has pulled up. Now, it doesn't mean, see, it pulls up and then drops off. Doesn't mean it won't pull up like this and then drop off further and give us a triangle before it then wants
But
to look at
I'm still in it
back.
anyway, Brian. So there we
Oh,
go.
right.
Yeah.
And break even or a little bit of drawdown. Because you never moved your stop loss up either.
No.
Yeah. All right. Well, you're still in it for the buy, aren't you?
Yeah.
Oh my God.
Yeah. Obviously, it's one I could have taken half at
Yeah, you're 3/4
as
and
we've obviously discussed. Yeah.
okay. Well, this is this is a trade you took back in start of December. So
Yeah.
we didn't have that discussion until the start of this year. So
Um,
audio, just all the way it is. Euro AUD. Oh gosh. You never got knocked out of that, but it's coming. Okay. Wow. I mean, it does look trending down again, doesn't it? But then again, look at this. It's been coming back to the same sort of zone here and then going off. So It might not break down past here. You're still in that short though. I think you would have got into it. Wait, no, you might not have. Okay. All right. It's not a time to look at a trade on it at the moment. Okay, you're a CAD. Oh, only wicks out. So this is not a trade, Darren?
No, not a trade. No.
Because we're not far enough out of the rail. We do have a short, we do have a change of trend bar, we do have a triangle, but we don't have, it hasn't pushed enough into the like over expensive price to actually get a significant sort of change direction and pullback. This could quite easily now come to this midline and then push back up again. That's what we've seen in the past anyway. It may not, it may continue down, but then that will give us an opportunity for a buyback up again if it comes out of the rail. All right, Euro CHF. Oh, there's still a big gap in there. Is it? Oh, yeah, there is. Okay. Oh, wow. Okay, so, we do have a triangle. We did have a short. Did you get into that? No, it wasn't far enough out of the rail again.
No.
Okay. Gosh, there's so many like little bits and pieces you have to consider for entry, isn't it? It's particularly selective. Okay. Euro GBP, which you don't trade, but there is a definitely would have been a good trade, and that would have made it 3/4. Anyway.
This was a good move for me. I caught this one.
Yeah, that whole push down.
Mm-hmm.
Lovely. Are you still in it or?
Yes.
Yeah. Okay. Good one, Tom. What's that last? Yeah, I think 4th of Feb. 3rd. Wow. 31st of January. And then it's, yeah, okay. Different. Okay, rightio. Euro JPY. Again, they're all, a lot of them have been round the middle. They've pushed back down. You still in it, Darren? You're muted.
No, I'm out because when we had the second long, I moved the stop loss up
Oh, and it's come down
and it's come down and took me out at
taking you out there.
break even or slight profit or break even or something.
Yeah, okay, that's good. Sorry to keep asking you these, Darren, but
That's
I
all
seem
right.
to forget from day to day, and it's just the criteria. So yeah, you had your strategy changed the end of last year. The revelation was that if it created a short, then another long, like for example, on that, you'd move your stop loss from here up to there. And if it came back, well, you'd be, yeah, okay. Good. Euro NZD, this is the same as Euro AUD, still just bouncing around. Didn't have a short, did get a triangle, not a lot outside the rail. It's, yeah, bit of a non-event at the moment. Euro Singapore, again, not a really choppy, we needed to come outside this rail. And this would not, this, I'd also point out some of the examples that if you had got in this longest there, it never made it really to 3/4. Well, close, but never really made it this could have been a double loss. Or potentially anyway, if the stop loss was down there, and that would have been quite a large stop loss, very short, minimal profit.
Yeah.
Margin on it. Euro USD. All right. Now that jump back down here, and now a push back up again. This shows that US is, well, it's filled the gap, but also too that there's a fair bit of US weakness on that. Now that would have been a very good trade. Well, not necessarily, because once that long, where's is that where the long is for you, Darren? So that candle will have to be produced. You'd have to get in on the next candle wherever you did.
Yeah, it
and then you're
is.
three
It is,
quarter.
yeah. It is. So it's a quite a poor risk to reward ratio on that one.
Yeah.
I take it and I'm still in it.
Say, for example, you wouldn't get in until about there somewhere. Your stop loss would be down there somewhere, and your three quarter would be here.
Yeah.
You're like 0.5, and then potentially at the row. But you would have had one, and then the second trade, if you would have done the trades like, but that was back at also at 14th of January. So
I mean,
it would have.
that's unusual to have such a poor risk to reward on these. I mean, it's usually better than that. But yeah, this one was or is a bit rubbish, really. But I'm in it nonetheless, and I'm still in it. So
Yeah, okay. So yeah, you're in still, but you could, right, okay.
yeah.
So that's a point though, do you assess the risk to reward on it and go, not really worth it?
Well, I do. I mean, as I say, I still took this one, but I do look at that. You know, if as I say, it's not often it's as poor as that. But there have been
Less,
occasions
so if it's
when
less than one, you don't take it, or
well, no, I mean, if it's if it's like a 0.8, 0.9 is okay. If you get into a point here where it's only like you're risking
0.5.
1% to make 0.5%, it's really debatable whether it's worth it. Particularly if I'm
Yeah.
going to take half of it out at 3/4 point.
Yeah, correct.
I mean, it's
But at least it would have been some profit and then a break even there.
yeah, it would, yeah.
So it's sort of like, okay, we could be risking two trades. All right, no worries. All right, let's look at the GBP. So GA, gosh, it has it's spiked back up there, didn't it? So this is the example 3/4 and break even.
Yeah.
Rightio. Well, we're not in. Yeah, you're still in that trade though, aren't you?
Yes, yeah.
This see the changes that we've spoken about, Darren, like the having the 3/4 and the break even trade. You would avoid being in all of this rubbish and this
Yeah.
pullback now.
I would, yeah.
And you would have had some profit.
Yeah.
And then and
Yeah, you would.
then you'd actually be out of both of those trades now and just sitting there with a 3/4 profit one.
Yeah.
I can't, all I can see is the upside on the what we've been talking about.
Yeah.
All right. GCAD. Right. No. Well, this one, did you profit on that?
Now what happened with GCAD? Yeah, I'm out of this now. So that's
Yeah.
right. It's at the top of the rail, I'm out, and that's it. So job done.
Yeah. Yeah. Okay. Single. That's good.
I caught that one too.
Good one. That's a long. You had the long there. Would have got in about there. Ooh, that's a fairly significant stop loss as well. 3/4 would have been there. Oh, 0.8's not too bad. Out there, 1.2. Okay. You're
That's
not
okay.
considering it. You're not considering it any time, sort of like bringing your stop loss up
Well,
to.
that would be radical, wouldn't it? That really would be radical. I don't know.
Well,
I think on these daily time frames that they just need do need quite a lot of room, you know, because you just you
no,
can
I
just
agree
get
with you.
wicked out very easily on. And
Yeah, I agree with you, Darren. Yet when you, yeah, okay. Well,
I mean, your risk to
how,
reward is much better. So you know, it again becomes a bit of a numbers game again, doesn't it? Is with the
yeah,
additional losses, how the additional losses offset by the better returns on the winning trades.
yeah, because I mean, I just remember one of my trading mentors was saying, like your stop loss is your profit regulator. It's like that's what increases or decreases your profit amount.
Yeah,
But then there's always risk associated with it.
yeah,
But maybe we look at this as a, yeah, because it does all relate to how far out and where you're taking the trade. It's like the comparative difference between where price went to and where the long or the short, depending, in this case the long, where the long gets created in the feed to where you potentially can get into the trade.
yeah.
Because
What is
you
that?
might not.
What is that ratio?
This is 2.42 at the moment,
2.42.
but
Okay.
but if you took back here, it's only 1.24.
Oh, I see.
And I'm just suggesting that you know, and it's a bit radical for Darren to consider,
It would have worked very nicely there,
but it may not. And we'll let's look at this with a bit of thinking in following trades to see whether
yeah.
this would be potentially
But they, you know,
something.
very often I go into drawdown initially when I enter these, so they do pull back, and
Yeah.
you know, I wouldn't be very relaxed because I'll be thinking, you know, I get stopped out here within a matter of hours of the
Well, you
trade.
did the other day, didn't you,
Yeah,
with one of the others?
that would
I think it was.
take some of the relaxation out of what is a relaxed strategy, I think. So
Do
I'd
you
have
think
to,
so, Darren? I mean, I'm
yeah,
not.
I think for me it would,
I'm
yeah.
okay. Well, let's look at, for example, GA.
For the moment I put these on, I can forget about them until you know, have a look
Yeah.
the following day and just see how it's doing, you know.
Well, see, this is a different situation. Again, as I say, you've got candles outside, but you have a short that's basically way out. I mean, it's not way out, but the short gets created, then it does a pullback.
Yeah.
But
It
this,
didn't,
you
it
see, it
didn't go
never
anywhere
pulled
near the
back.
top of
It
that
never
candle.
pulled back to the rail.
Yeah.
We just have to, I don't know, we'll just look at these and see what's maybe what criteria of where candles are and where the short or long is to what the decision would be in relation to where the stop loss would be placed.
The simple thing would be to I don't want to go back 12 months. I could go back 12 months, but I could just look at all the winning trades, ignore the losers, they lost. Look at the winning trades. Um, so
Yeah,
I have got a record of them when I entered and when I exited, so I could look at them, just apply a different stop loss retrospectively and see what.
and see whether you would have
Yeah,
maintained that
yeah,
profit.
see what the results would have been. I
Okay.
should do that really, shouldn't I?
Well, it's
Yeah,
only if you have the time and you want to. I'm just, Darren, all I'm trying to do here is for me as well, to increase my profit margin on trades that I would have won anyway.
yeah. Well, I mean,
It's,
I had a profitable year last year doing this, so that's good. But yeah, why
yeah,
not? 12 months of it. look to see if we can refine it and
Well, but isn't trading, Darren, about refining
yeah,
your
oh,
strategy rather
absolutely.
than
Yeah,
like if something works, what is it, the old saying? If it's not broken, you don't need to fix it. But,
yeah,
but the point is, if you can fine tune it, maybe it's and it creates more, a bit more profitability, then maybe it's worth it. I
yeah.
don't know. I'm just anyway. So here would be a different example. Long's up in here. There's, that would have worked.
Yeah.
Um, the GA with that would have worked. Okay, GBP CHF. Not in the trade, don't nowhere near, still doing that. GBP JPY. Oh, where's the rails? There. So here to there, okay. This has got this is not a big difference though. So if you have a long on that, and there's the long, you
Suggesting
wouldn't
put the
enter
stop
into.
loss below the entry candle or the preceding candle. Below the
Sorry?
where you suggesting put the stop loss below the
No, at the rail.
or put it at the rail. All right. I'll see what you mean.
So for example, here so it came out. I can't click there. It's got a triangle. Then you get
Right.
a
Put it at the
long.
rail, yeah.
That long happens. So you really can't enter until the next candle. So it's somewhere along that next candle. So
Right,
if
put it
you,
at the rail, yeah. Yeah.
yeah, and then instead of having it way down there, you just put it at the rail.
Yeah.
I mean,
That
you've got
that would be difficult to back test because of the rails move.
true.
What I thought you were suggesting was
Oh, at a
do-
previous candle.
yeah, or do something, yeah, something like that, or even
Because the rails move, but the candles don't. That's right,
yeah,
Darren.
yeah.
So if you were to put it at the bottom or the top of the previous candle,
Mm.
that's a 3/4, easy. And then you've got a break even with, risk free on that one as well. But you do have a 1.3 on it rather than a 0.7. You know what I mean?
Yeah.
Well, just, I think your suggestion of candle is much better than rail because, as you said, rail moves, but price doesn't once it's created. Anyway, just a thought.
Yeah. It's quite good stuff.
Just a thought. How many of them come back and go past the candle before the long or short? That's the question.
Well,
Okay.
if they do, then there's a good chance it's going to continue to go the wrong way.
Yeah.
That's another thing to bear in mind, isn't it? So,
Yeah.
um,
But I don't want you in any unrelaxed situation, Darren. I don't want you in any,
well,
you know,
I quite like that idea of the preceding candle. I think that's interesting because that really does tighten the stop loss up.
it does, doesn't it?
Yeah.
But does that risk your profitable trades at all? Or does it, but it won't decrease, sorry, it won't decrease the amount of losses that you have, but it may have those losses happen sooner and you not be in trades for a longer period of time. Does that make sense?
Yeah. Well, it will probably increase the number of losses, but I suppose the question is by how many? Um, will the risk to reward be so much greater that it
Then
more
then
than
the
offsets
potential
the
losses, extra additional losses.
um,
Yeah. Okay. Something to observe, think about, back test, whatever. Okay. All right, nothing there at the moment for potential trade anyway. So GBP NZD, again, nothing here. This would have been, let's look at this example. Red triangles,
Well,
beautiful.
that would have been
Come
all
back.
right.
Yeah, yeah. Where you got the short, you would have been above that. Wouldn't have been any drama whatsoever.
It will.
Why put your stop loss up there where you could have had it there? Like, let's look at this example. Hang on.
I mean, that wouldn't
There's
make a massive difference, to be honest, that one, because it was such a big candle just before the short, but it would have, you know,
no, it's a
it would still
little
been a
candle
better.
before the short.
Yeah.
It's only there. So, and then 3/4, you would have profited. Like that's a 2% rather than a, like 0.8. And then you would have moved your stop loss from there to break even once it came to 3/4, and bang, it comes back. You're out at break even. So
Yeah.
you haven't lost on the second trade. You haven't won anything, but you've won on the first trade by 2%. Where is it? There somewhere anyway. Yeah, 2%. If you're on a 1% trade, that's all I'm saying. Sorry,
I mean,
I need
wait
to.
we get to oil a bit later on, I'd be already now. Well, I'll be quite substantially in profit now already
No, that's what I mean.
on that one, with a long way yet to go before it gets anywhere near the.
3/4.
What it will do, it'll make the 3/4 point trade certainly a more interesting, won't it? Because
Do you want me to go down there now? We'll go down and have a look at it while we're
well,
here.
yeah,
7 point. Yeah. So the point is here with the rail. If you were to take the trade after that short, which you would have done, that's a short somewhere in here, let's for example, and then your stop loss is the one candle before it, 3/4 is down here, that's a 3 whatever, and then to the rail is a 5. I mean, you could have even knocked out there. It's still 3%. I mean, maybe it's a little bit further for the 3/4, but yeah, there.
it came very close to the 3/4 point. Didn't quite make it today, and then.
Mm.
But yeah, no, I
Mm.
mean, like you say, that's that's potentially
A much better ratio. You know, if you got your stop loss back up here, you're only 1.6.
yeah.
I'm just trying. So it is what your risk is to what your reward would be. But in the cases of the trades that you're taking, all I'm looking at is it worthwhile having the stop loss a little bit tighter, like to be the candle before it, rather than way up at the extreme. That's all.
Yeah. Sort of thinking now, as I'm, thinking of these ideas in my head, do I do I do do I do two trades, and one with the old style stop loss and one with a tighter stop loss? Do we do something like that? There's any combination of things you could do.
Yeah.
So if you do get, you do get wicked out on the tighter stop loss, you've still got the other position
Oh,
potentially
yeah.
run. Yeah, again, you could
Yeah.
do that. You could
Yeah.
do two trades like that.
Like this is an example, same here. You got that. Oh, we already looked at that one. Sorry. GBP Singapore.
Yeah, well, I'm in this now with stop
Yeah,
loss, yeah, but all they sort of swing low. So
which is
again,
there, but it could be there.
it does make quite a bit of difference.
Well, we'll have a look. Hang on a minute. Let's have a look. If we put along and you go, that's the long there, you wouldn't get into the trade till about here somewhere, for example, and that long there. So hang on. 3/4. We'll do 3/4 there. Let's just do the 3/4 at the moment. So you got there, you got a 1.8, or if you put it back down there, you got a 1.2.
Yeah.
It's a
So
0.6 better off.
even the 3/4 trade it's quite a nice trade, isn't it?
Yeah. And did it ever come back to there? To that candle? No.
So far, no.
No. Okay. Well, there you go. Just got to look at how many of these do. All right. And but maybe we've got a lot more volatility with he who shall open his mouth and create circus.
Yeah.
Anyway. Well, even here, look at this.
Wouldn't
Like you've got.
I'm in
Sorry?
this, even with a tighter stop loss, I'd still be in it in
You'd
spite
still be in it. That's right.
of that massive
Absolutely.
spike.
Yeah, but the point is, you would still be in it. That's the long there. You would have been in the trade there. Your stop loss would have been here rather than down there.
Yeah.
I mean, that's not a lot of difference. But then in a percentage, it would be.
Yeah.
Let's have a look. Long on that. Enter where we got long to do somewhere around there. And either stop losses here, which is hang on, let's get the 3/4 roughly there. Roughly. Don't so that's a 1.5, or you're gonna have a 1.
Yeah.
1.5 or a 1. So it just again increased, but it never came back to that. I mean, even this spike down here, but it didn't come back down past where that long came in. It might depend on feed and like maybe your longs are in different positions to what mine are. Anyway. Okay. NCAD. Oh gee, 2025, the year of revelation, isn't it, Darren?
Yes.
My gosh.
Yeah.
Just not idly sitting and waiting. It's
But when you're trading on the daily time frame, you need a year of doing something.
well, this would knock
Or
you
at
out, but
least
you would
6
have
months.
yeah, you need something to while
You
you
do
sit on your hands, you
uh,
need to have something to think about.
everything's on a longer, no, everything's on a longer term, so you need months to
Yeah,
sort of analyze your results, don't you?
yeah. Now the thing is, this didn't come outside the rail. You probably didn't get in the trade,
No.
even though we had a triangle. So maybe this is not relevant. But let's look at it anyway. So long position, you had the long there, you would have got in the trade somewhere in that candle, right? Your stop loss would have been down below that candle. Like I know it's come back. But the point is, you've got 3/4. You've already got 1.74 on it,
Yeah. I think this revised
and
stop
now and then you would have had the second trade. Once you've got that property, you would have gone break
break.
even. Or once it's gone to the middle, I would move that second trade to break even. Bingo, bango. You've made 1.4, 1.74, and you're out of both trades, and you're not in any risk, and it's not hasn't come out the other side of the rail, and there's a positive outcome for you.
That's if he says to take profit.
He would at 3/4. Yeah.
Yeah.
He automatically does 3/4 and
So
at
that's
the
what I'm doing
rail.
now. That's what I'm doing now. I've done that with GBP SGD. That's the first one I've opened 2 positions with a TP at quarter point and a TP at the top of the rail. But I think this tighter stop loss worked particularly well with this quarter point.
The
With this
3/4.
the 3/4
Yeah.
trade, doesn't it? It
Mm.
makes that a lot more attractive.
And even for a trade to the rail, which doesn't always occur. I mean, it's not, and then it becomes a break, a break even trade, like not a loss, not a profit, but who cares? You've made profit out of the 3/4 one.
You
And
could have made more than 1% typically on the 3/4 one with this, aren't you? So
correct,
still a
1.74.
good result overall. Yeah.
Yeah. Anyway, just sort of pointing it out. Something I'm observing, that's all.
Yeah.
And, yeah, there is back testing. You got some stuff to do while you... But the point is, there's lots that don't make it to the other side of the rail, and then they come back and then stop you out back down here somewhere. And you're in it for months.
Yeah. Waiting to be stopped out.
You could be sitting there just going like, oh, well, I'm not in there and I'm not in the trade. Yeah. And and you've made a profit and not a loss on the second trade. To me, it makes perfect sense. Anyway.
Yeah. It's making sense to me now, I must say.
Yeah. Look, there may be lots of other examples that this doesn't work. But the examples I'm seeing in this current market do work. And look, you're absolutely right, Darren. Not the rail, because it moves. You need to go on a candle price, and you would have had that previous candle to that long anyway. It would have been created and finalized. So, yeah, okay.
So if you want to know where 3/4 is, why don't you just do the high to low on the daily time frame for the 3/4 mark, and then set your take profit there?
Yeah, that's what I've done. I've just used a fib to find it. That's what I've done from the.
So what you do? Yeah.
I've just put
Tom,
a fib
so you go from there to there, and that's the 3/4.
Yeah.
Is that? Yeah.
Yeah,
Or
the
you
same thing
fib
I
it
use.
or do you fib it from the rail?
No, you do it from the high to low.
Or you can just do it from the middle of the rail, the mid rail to the top rail, can't you? That'll give
Oh
you.
yeah, you could half that.
Yeah, that's that's what I'm. That's what I've done with that GBP SGD trade. So
We'll see. There's 50% there.
yeah, that's it. Yeah,
That's actually a good way of doing it, Darren. Yeah.
it's a quick way of
Tom,
doing it.
thank you.
Mm-hmm.
It's a quick way. Yeah, rather than using price, just using the rail at the time when you take the trade to where 3/4. That would have profited. Even in that one buy candle there, that would have profited. You would have been out, or you would have had time to set your second trade up to break even, wherever that was where you ended it.
Yeah.
And when it came back down, it would have just taken you out of the trade. Now it's going wrong way. Well, who cares?
Yeah,
You've already profited out your 1.7.
Yeah.
So if you put the fib back at the height of the low, look at your 50% line.
Yeah. Well, that's the 50 there, but you got your 75 up here.
So if you're moving your stop loss up and you see it pass over the 50% line, you can consider moving your stop from the bottom to the 50% line.
Oh yeah, you could, couldn't you? Oh yeah,
because if it comes back at all, it'll take you out, but you'll still profit.
It spikes you there.
But what did you lose?
Nothing. Yeah. And you're not sitting in the trade for 4.5 months, Darren.
And you don't get caught if it's got a big pullback.
Yeah.
Once it pulls back into your zone from the 50 to the 25, put another stop, what's the word I'm looking for, Brian?
An order?
A sell stop.
Yeah.
At the 50% line now to buy.
Yeah.
If it comes back up and triggers you through, it should be going to the other side of the rail, right?
Yeah. It could be.
Because now it just pulled down and tapped your 25.
That's
where I would have got in.
That's a little radical for Darren, Tom. Come on.
Just something to think about.
He's just going on a little journey, not a
Small steps.
Baby steps.
Walk him slowly to profit. Oh, sorry, to higher profits.
You see me in 12 months' time. I'll be back in IML. I'll be a teacher. The top traders.
I expect to see you in your Lamborghini.
Yeah, that's right. Yeah, the daily time frame specialist.
Well, it is, Darren. It's like this is the relaxed thing we've been working on for a couple of years now, and we're just fine-tuning things. That's really what it's about. And look, you could keep doing what you've done because it works and is profitable. Yet, could we limit the amount of losses? Would it increase the amount of losses? We don't know. We've got to play with this, and
It will increase them, I almost certainly, you know, but by how many? That's the thing. You know, it might 10%,
yeah,
20 or
but
losses.
how many long-term trades are you in that will stop you out, that you're sitting there with them just going all over the joint? Like it's for me also too, it's like you could be in 10 trades that, for example, you get a profit that, and then you're sitting there just watching it, where you could be in that trade for another couple of months and it still stop you out.
Yeah, no, I can't quite. Yeah, it's certainly got me interested. This I'll
Anyway,
back test a couple of pairs and just see.
yeah, see what happens. Okay. NZD CHF. Here's another example. But, the point is you wouldn't have taken it. We have no triangle. It's not gone out. The long's way at the middle. Forget that, right? This would have been just a non-starter. NZD JPY. Come on, rail. Non-starter. We're waiting for it to come out and give us a green, which we don't have, right? NU. Now, this is a different situation. Again, well, this would have been a double loss, though.
This would have been a loss, yeah.
Double loss, though, because
Yeah.
you would have got into the trade there. You would have had your stop loss down here.
Yeah.
It would have pushed up, not made the 3/4, come back down, spiked you on both trades out.
Yeah.
Right. So that's just a straightforward double loss, but you would have lost one anyway. Yeah, that would have been a loss anyway because your stop loss would have been here.
Well, that's but whichever way you look at it, that was a losing trade. Nothing you can do about that, no matter
Yeah,
where.
but in what we're talking about, it would have been a double loss.
Yeah.
Where if you stay to your older strategy, it would have been only a single loss. That's what I'm trying to say. That's all.
So what is your high to low there with that red candle to the left?
High to this one here.
Mm-hmm.
What do you mean?
At the top of that candle and with your fib to the bottom of the candle, to the bottom of the move. From the top of the red candle there, down to there, 3/4.
Yeah. It came out the 3/4 and came off. Yeah. But it's not, but that's not where you would have measured it. So you would have gone probably rail to midline. That would have been, the half. It never made it up there. Anyway, but you're right. You're right when you measure it like that, Tom, but that's not like half of this channel.
Well, we already know the channel move.
Yeah, I know. Yeah,
why would you not use? Why would
I was
you not
about
use
to
facts?
say that, Tom. Yeah,
why would you not use facts rather than theory?
Yeah. Why not use price rather than a movable object? Interesting. That is an interesting point, Darren, isn't it?
Yeah.
But at what point do you take? Anyway, something to think about. I'm going to get going in a minute. Sorry. Singapore, let's go through these last few. Singapore, Japanese yen, nowhere near a trade on that one. But then again, you see, if you're in that trade there, that would have been good, wouldn't it? Look at that. There.
Yeah, well, you put your stop loss on that one because
you'd put it at the next candle down. So it wouldn't have been there, it would be there.
Yeah. So I did.
That's how I would see it, Darren.
Okay.
So if we've got that on a long, you've got that, you're probably in the trade around about there. Instead of it there, it would be there. Oops, I better put that up here. So that's sort of 3/4. That's a 2. or that's a 1.4, right?
Yeah.
Just shows an example. And then, and also too, if the long's further in, there's less chance of it coming back. Anyway, or where, so that's a win, and then a break even back, and you wouldn't have lost the second trade. It would come down here, that would have tapped you out, but it would have been break even.
Yeah.
So one win, yes, you're in it for a while, but for the second
One win,
trade,
one
but
break even,
but it's
yeah.
not a loss.
No.
And if this goes further, anyway, there you go. US CAD. Where's it? Oh my gosh. Oh,
Well, we have a short there now. This is what I was saying about the risk to reward ratio because it's so big that
yeah. That candle. Yeah, no. Crazy.
it's not really worth taking that
No.
sell.
No, I don't think this will be radical for a while. All right.
So what if you just
USDC.
put a fib from the high to the
Oh,
low on the lower time frame?
in here.
Yeah, and set your sell limit so it doesn't go past because you know it's going down. And if it comes back up to the 3/4 there on a pullback, it'll automatically trigger you in for the short.
Yeah, up here.
Mm-hmm. If it never comes back, it's not going to trigger.
It doesn't matter, does it? Yeah. No, something to think. All right, USD. I think Darren's a bit more risk averse in relation to that. So we don't have no. That one's not. Oh, that would have been no. You wouldn't have taken that. Oh, you might
Yeah,
have
no, I'm
taken
in
that
this one.
trade,
I'm in it. I'm in it. So
but
I'd have been knocked out on this one
yeah,
under
okay.
this potential new rule, but I'm still in it. I did survive. So
Just by
yeah,
the skin of your teeth there.
yeah.
Wow.
So
Okay.
that would have been a pretty fast loss, but that's just the way it is.
Yeah. Okay. USD JPY. Maybe there's some pairs. Oh, I don't know. We'll just see too. UJ. Oh wow. Okay. Yeah. No. This is. Yeah. Okay. No. Okay. And USD and Singapore. See, that would have been a 3/4 win back. Yeah, there would have been a single profit with a break even. But you wouldn't have been in it. Like again, I mean, this is a situation of being, I suppose, to a certain extent safe, but you're going to risk not having that second trade go through.
Well, I'm in this
And
one now, so I would have been out of this by now. I would have made
you would have made a 3/4 profit and you would have had a break even on the
and
second
with the
trade.
tighter stop loss, it would have been
Yeah.
a decent profit. Yeah.
Yeah. All right. Well, you got your gold, silver, Bitcoin's back to 99, and we looked at oil. Okay. I've got to run, guys. Sorry.
Yeah. Okay.
Big bus thing. Thanks, Tom. All right,
Yeah.
we're anyway. See how you go, Darren. If we get some time to do a bit more back testing, there's a few more that you can see there would be some losses, but like the thing for me is like, well, how long do you stay in this trade under sufferance as well, where it's going to come back and stop you anyway? It's that like, so you've got, what was that one we just had was, so UJ? No, USDCHF. Like, that's fine, but you survived, great. But what's stopping it now? Turning around and come back and knocking you out.
Yeah.
I mean, the chance is it'll go down or go up, but it's anyway. you know, sometimes for me, drawdown is a painful spot to sit.
It broke structure, came back,
Yeah,
failed to
no,
break the high,
yeah,
and now it's pushing back down.
yeah. But
Chances are
doesn't
it's
mean
going to
it's
keep coming back down.
you reckon it will?
Well, that's the probabilities of it.
Yeah,
Because you see
and
how it
yes,
broke structure?
yeah,
It gave you the bear trap, pulled back up, 3/4 of that move, tapped
more
in,
than that. Yeah.
but it didn't break the high.
Yeah, but it doesn't mean it won't continue. It does. This doesn't mean that it won't go to the center and then go back up and break the high.
I understand that. I'm just saying you're looking at probability.
Yes, correct.
So if you want a probability that this will not come back, put your fib on to the high to the low of the lower time frame with your 3/4.
Mm-hmm.
And when it pulls back up to the 3/4 mark on the lower time frame, look how it responds. If you get a short out of it, take it for a further push down.
If it comes up, yes, right. But if it goes past the 3/4 and further up, it's
You're going the
potentially
other direction anyways.
yeah. Well, I'll just leave that on there for a minute.
Yeah, you can take it off. I'm just
No, it's
throwing out an
okay.
example.
It's okay. All right. Oh, look, we've got Darren. I can see the cogs moving. Darren's cogs there. Going round and round and round now. It's like, sorry, I'm trying to bear into the bear cage, so anyway, it's not just for you, Darren. I'm looking at it as well to try and increase that sort of level. Anyway, it's after 6. I better go. I'll see you later.
Right, take care,
See you
everyone.
tomorrow. Hey, remember, non-farm payroll coming up, but yeah,
Well,
wait for that big speech.
yeah. Anything